This is where you can expect to see deflation in today's economy instead of inflation. Welcome back to the Industry Leader Update. As inflation is raging through the U.S. economy, another economic outcome is likely to hit the U.S. housing market. And it's not a crash like the one that we experienced and rocked the financial markets in 2008, but it's rather a deflation of home values. Now, inflation is nibbling away at the edges of everything: discretionary dollars, menu choices, transportation plans, and the decision whether or not to purchase a home. And with the cost of daily essentials surging, Americans now find themselves questioning whether now is a good time or if it's the best choice to make what is likely to be one of their largest financial decisions. That is, to purchase a home and get a mortgage. And why shouldn't they hesitate? Uncertainty engenders a certain sense of caution and hesitation. The Federal Reserve's tightening of monetary policy, increasing of interest rates, and pullback of mortgage bond purchases, that has driven up mortgage rates. Fortune.com reports Black Knight data revealing at today's current mortgage rate levels, the typical American household is going to have to spend about 29% of their monthly income just to make a mortgage payment on the average priced U.S. home. Now, that's a mortgage payment to income ratio that's 10 percentage points higher than it was just a decade ago, when the average American's mortgage only accounted for 19% of their total monthly income. The Fed's sustained low interest rates also help fuel another rush or surge in home values, and also we're seeing the subsequent mortgage payment income to ratio jump from 24 to 29% just from December 2021 due to the recent rate hikes. Consequently, what we're like to see is not a crash in housing values, but rather a softening or a deflation of home price appreciation and modest declines in specific overheated markets. Now, that bodes well for both future reverse mortgage borrowers or applicants and also those who already have a home equity conversion mortgage today. Those seeking to get a reverse mortgage will certainly see a smaller net benefit thanks to higher interest rates. However, that is much more preferable to a 1-2 punch of higher interest rates coupled with a crash of home values that we experienced in 2008. The primary benefit for a borrower that's already holding an adjustable rate home equity conversion mortgage is they're going to see their line of credit grow more quickly, thanks to the available credit growth being keyed to the current month interest rate, plus the ongoing 0.5% FHA mortgage insurance premium. So here's just one example. Mimi got her reverse mortgage 2 years ago, and she had $150,000 available in her line of credit or available principal limit. In just the last year, her average line of credit growth has averaged 4.35%, and that accounts for the FHA mortgage insurance premium. Now, let's assume she has not made any further withdrawals from her HECM line of credit, and her line of credit is going to grow by $6,525 on average. That will increase her borrowing power to $156,000. If her average growth rate in 2022 is 6.4%, her new available line of credit would be approximately $165,000. Now, keep in mind, while rising rates potentially increase the available funds in the HECM line of credit, they also accelerate the loan balance, and consequently, they reduce the potential remaining home equity when the loan is ultimately terminated. However, all things considered, if inflation were a person, they would likely be the reverse mortgage salesperson of the year. While the cost of food, energy, and transportation is likely to continue to surge, the irrational pace of home price appreciation may be actually coming to an end. And that may be the Federal Reserve's first bona fide victory in the war against inflation. Now, what are your thoughts? Leave your comments in the comment section below. Also, be sure to share this video with others on your social media accounts, LinkedIn, Facebook, and Twitter. Don't forget, we have a YouTube channel where you can subscribe and hit the notification bell. That way you catch every one of our latest episodes. And each and every week, you can listen to our podcast, HECM World Weekly. In fact, we're the nation's only reverse mortgage podcast, weekly one that is. So we'd love to have you on that show and just listen to the news while you're on your drive to work or working out at the gym. Thanks again for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis here at Heck 'em World.